Meet Tesla's Model 3 sedan, the most affordable Tesla model in China, and BYD's Seel sedan, which bears a striking resemblance to the former, but with a much higher price tag. Despite the price disparity, BYD is giving Tesla a run for their money in the Chinese EV market, which accounts for more than half of all EVs sold globally in 2022. Whoever can dominate this market will gain a significant advantage in the rapidly growing industry. China's competitive car companies have the potential to create new industry leaders like General Motors or Ford, and the country itself may become a dominant player. We took a closer look at the business strategies, technology, and manufacturing processes of BYD and Tesla to see who has the upper hand. BYD, backed by Warren Buffett, has experienced explosive growth in China, jumping from 13th to the top spot in 2022, with overall sales that have more than tripled to 1.6 million cars. That's 500,000 more than Tesla's sales during the same period. BYD's success is impressive, but it's not considered a cool EV brand yet. They've recently introduced a new series of cars that could change that, with specifications that match those of Tesla's Model 3. While the Seel sedan sells for around $30,000, BYD has models that sell for half that, with most having an all-electric or plug-in hybrid option. Their strategy is to offer consumers a variety of options to choose from. On the other hand, Tesla's fleet is all-electric and is positioned as a premium vehicle from the outset. Traditional car companies believed that consumers would be motivated by economic concerns, such as the cost of gasoline, but Tesla's bet on creating a cool, sexy car that appeals to luxury buyers has paid off. If we look at each company's profit margins, we can see that Tesla exceeds BYD, but that could change. In early 2023, Tesla reduced prices for its two most popular electric car models in China by as much as 13%. The company said the cuts were possible through engineering innovations and cost controls, but they also came just before China began withdrawing its decades-long subsidies for EV buyers. As the market matures, smaller companies that relied on these subsidies to remain profitable will need to stand on their own. Tesla may have the marketing power to weather the subsidy crash, but BYD has its own strength: production, specifically battery production. BYD is far more vertically integrated than Tesla, producing cars, batteries for its cars, and chips. Before BYD became an EV company, its main focus was on batteries. This branch of the business ensures stability along the supply chain, even during disruptions that can plague its competitors. In contrast, Tesla still sources the majority of its batteries from outside suppliers, and this reliance on outside sources could become a vulnerability. Overall, the Chinese EV market is highly competitive, and both Tesla and BYD have unique strengths and weaknesses. As the market continues to grow and mature, it will be interesting to see who comes out on top. China is also a dominant player in the battery material supply chain, which gives BYD an edge in terms of vertical integration. The company has its own lithium mining and processing facilities, allowing it to control the quality and cost of the raw materials used in its batteries. This also gives BYD an advantage in terms of sustainability, as it can ensure that the materials used in its batteries are ethically sourced and environmentally responsible. Another area where BYD has an advantage over Tesla is in its business model. While Tesla primarily focuses on producing high-end electric vehicles, BYD has a more diversified portfolio that includes electric buses, trucks, and even solar panels. This allows the company to tap into a wider range of markets and to weather fluctuations in demand for electric vehicles. Overall, both Tesla and BYD have their strengths and weaknesses when it comes to their business strategy.